Maintaining a good credit score is one of the most important life skills that they don't teach you in school, alongside how to do your taxes, how to talk to the police.
I didn't mean to commit a crime. I didn't even know that drag racing was illegal.
But if you maintain a good credit score, you will be able to apply for the best credit cards that give generous travel rewards, and you will be able to get the best interest rates on any loan product you apply for, such as mortgages and car loans, which could save you tens of thousands of dollars. Now, FICO has a credit scoring model that includes 5 factors of credit. And in this video, I'm going to go through all 5 and give you tips on how to make each credit factor work in your favor. This is 5 tips to drastically improve your credit score in 2025. Hey credit warriors, my name is Ben Hedges, aka the Credit Shifu, and on this channel, I cover all things credit and personal finance. If you like the sound of that, please subscribe, but otherwise, let's get into it. And this video is brought to you by Kickoff, but more on that later. Number 1, maintain low credit utilization. So credit utilization, which FICO also describes as amounts owed, is 30% of how your credit score is worked out. It is the amount of your credit lines that you are using, and it is expressed as a percentage. So if you have $10,000 in available credit on a credit card and the balance that is reported to the credit bureaus at the end of the month is $2,000, then you are at 20% utilization. The confusing thing is you have utilization on each of your credit cards and utilization overall across all of your cards. Both are factored into working out your credit score. In my experience, maxing out one card can really have a very big effect on your credit score. I've done an experiment where I almost maxed out one card. I spent $14,333 on a card with a $15,000 limit, and I let it report to the credit bureaus. Just maxing out that one credit card dropped my credit score by 60 points. Now, luckily, your credit score does bounce back after you pay the balance and the card reports again to the credit bureaus. But to avoid this altogether, if you do need to spend a lot of money one month, try to spend it across multiple cards in order to report lower utilization on each one. And of course, it goes without saying that you should be paying your cards in full each month too. But in general, try to keep your credit utilization as low as possible. You can achieve this by paying your cards off multiple times in one month. This may be necessary if you're new to the credit game and you only have cards with very low limits, like $500. How low should your utilization be exactly? Well, people often say below 30%. But if we look at some data from Experian, we can see the average utilization of people in different credit score bands. We can see that very low credit scores are associated with high utilization. 82% utilization on average for people from 300 to 579. But then if we look at some higher levels, people with credit scores over 670 are typically reporting around 35% utilization. Over 740, 14%, and people in the 800 club's average credit utilization is only around 6.5%. So in other words, if you want a really high credit score, just keep it as low as possible. Single digits if you can on each card and in total. You can ask for credit limit increases from your card issuers to help keep utilization lower as well. Number 2, maintain a perfect payment history. So payment history is really crucial. This is 35% of how your credit score is worked out, the biggest single factor. I probably should have talked about this one first, actually. But anyway, you need to maintain a perfect payment history from the point of view of the credit bureaus. If you miss a payment by 30 days, it gets reported on your credit report and could drop your score by up to 100 points. Yes, by that much. But that's only if it's late by 30 days. So if you do forget to pay your credit card bill, don't despair. If it's just a couple of days late, immediately pay it, and the bank won't report it as a missed payment since you're still within that 30-day window. Now, you may still get hit with a late fee from your bank, but if it's your first time, you can usually phone up and get that waived. Of course, the best thing to do is to have auto pay for at least the minimum payment on all your cards set up. This way, you will never get hit with a late fee and you will never have any late payments reported to the credit bureaus. And with payment history, it isn't like utilization where if you pay what you owe, it disappears. No, late payments stay on your credit report for 7 years. Although the effect they have on your score decreases as time passes, and after 2 years, as long as you don't have any more late payments, the effect of the late payment should be minimal. But if you want no negative impact at all, make sure you pay on time. And conversely, for people new to the game, if you have several cards and you're paying them on time each month, that can really help build your credit. Now, for those 2 factors that we just talked about, credit building apps are a great way to build your credit. And that brings me to the sponsor of today's video, Kickoff, which is an app that provides this service. In fact, they are the #1 credit building app on the App Store. Basically, Kickoff does a few things. First, this app does have a monthly fee. There are 3 plans and the most basic is $5 per month. But this is kind of the point because this fee then gets reported to all 3 credit bureaus as an on-time payment each month. In addition to that, Kickoff also opens a trade line which will show up on your credit report too. This trade line is going to be between $750 and $3,500 depending on which plan you are on. It increases the amount of credit you have available and lowers your credit utilization, since you're not going to be using this trade line to buy stuff. It's just for building credit. So right there, Kickoff has covered the 2 biggest factors of credit according to FICO. Payment history, which accounts for 35%, and amounts owed, also known as credit utilization, which is 30%. So that's 65% of the factors affecting your credit being worked on. Kickoff users with credit under 600 who made on-time payments saw an average increase of 25 points in their first month and 85 points in their first year. And having good credit is really important with mortgage rates as sky high as they are. A person at 620 will end up paying $50,000 more in interest on a mortgage of $300,000 than a person at 760. It'll be a similar situation with car loans and any other type of credit product. I could have really done with Kickoff when I started out on my credit building journey. I remember getting denied for the Macy's store card when I was buying my wife's engagement ring because I had no credit history. The guy took pity on me and gave me his friends and family discount. But anyway, I hope your journey can go a lot smoother than mine, and Kickoff can help. They are offering my audience 80% off your first month, so that is as little as $1 for month 1, depending on which plan you choose. Just go to getkickoff.com/Ben or click the link below. Number 3, keep your average age of accounts as long as possible. Length of credit history is 15% of how your score is worked out. So you may think that this is just a waiting game, waiting for years to pass so that your once young credit card and other loan accounts become old and length of credit history starts influencing your score. But there are a few things you can do to help this along. First, don't sabotage yourself by applying for too many new accounts, since each time you open a new credit line, it shortens your average age of open accounts. Then secondly, you can actually add credit history by being added to a friend or family member's account as an authorized user. But not all authorized user cards are created equal. I discussed this when I interviewed credit expert Anthony Davenport. Is it true that some cards don't give the full credit history, or do they all give that now?
Amex, for example, they'll let you add an authorized user and it will show up on their credit report, but only from the date they were added, so you don't get the real benefit in history. Meanwhile, like a Capital One card will show you the whole history, and it's a great card to be added to.
So if you get added as an authorized user on a Capital One card, you will get the credit history from the moment the primary account holder opened the account. That could be years ago. Imagine you're totally new to credit and suddenly you have an account showing 5 years of on-time payment history showing up on your credit report. That's really powerful. These are the 4 banks that Anthony recommends for authorized user cards due to the fact that they report the entire credit history on your credit report. All right, let's move on to our next factor. Number 4, be careful about applying for new credit. So what they call new credit is 10% of how your credit score is worked out. Basically, every time you apply for a new credit product, whether that is a credit card, a mortgage, a car loan, or a personal loan, whatever it is, they will do what's called a hard pull or a hard credit inquiry. This drops your credit score temporarily by up to 5 points. So the lesson here is don't apply for too many credit cards at once. Spread applications out by a few months and let your score recover. The good news is that if you are doing what they call rate shopping and looking to get approvals from multiple lenders on mortgages or car loans to see who will give you the best rate, FICO will combine hard inquiries for the same type of installment loan product in a 45-day period into a single inquiry. This is only the case with installment loans and not with credit cards. So don't think that you can apply for a load of credit cards in a 45-day period and it's all just going to be one hard inquiry. All right, moving on to our final factor of credit. Number 5, get a mix of credit types. Now, what they call credit mix is 10% of how your credit score is worked out. Credit cards are the most basic credit product that people start out with. They're easy to apply for, low commitment, you can cancel anytime, etc. But if you get a mortgage on your credit report, that gives a stability to your credit score that you don't get from having credit cards alone. That is because applying for a mortgage is the most thorough financial audit you can go through. Believe me, I've done it twice. Car loans are also another type of credit that will help your credit score from a credit mix point of view. But obviously, don't go applying for a car loan or a mortgage just to improve your credit. Remember, this is just a factor that is 10% of how your score is worked out. It's worth knowing about for when the time comes, but not something that you can intentionally do. All right, guys, those are my 5 tips to get a great credit score in 2025. The most important by far are the first 2, credit utilization and payment history, but the others can help too. Don't forget, you can get 80% off your first month with Kickoff at getkickoff.com/Ben and in the link down below. Kickoff works on precisely those 2 credit factors that have most effect on your credit. Please subscribe to the channel if you're new. We'll see you next time. Bye-bye.